You're listening to Real Radio, the nationally trusted name in real estate investing. We dig deep to discover investors' why in real estate. If you want to skip all the BS and get in investors' heads, you're in the right spot. Be one of the thousands to check out realradio.com.
Welcome to Real Radio. This is the Real Estate Rundown, episode 283 with Owen Dashner
and Aiden Bear
and Ted Kosh.
There you go. He got it,
flawless.
Buddy. Flawless. You think we've done this 283
First
times?
try,
right? Yeah. What's up, Teddy?
Well, you know, I feel like we've had a fun-filled day already.
It's been a good week.
The real lunch days just are a full day of this.
There was a lot of people there today. I mean, it was
considering
consistently
negative 30 wind chills outside.
Oh, dude, this time of year.
You know what I was so worried about? I just bought this car wash.
Yeah,
and
frozen pipes.
And I call Guy Bailey up, the original owner. I'm like, dude, what do I gotta do? He's like, make the ground temperature warmer. He's got the ground heating system. And he goes, watch your cameras and make sure that the temperatures don't get too cold so all your chemicals don't freeze. I'm like, okay. Turn up your heater in the main room.
So, okay, I'm curious about this. Actually reminded me of something. So, all right, we live in Omaha, Nebraska, people. A lot of you live here too, and the Midwest is a very, very weird place with weather. Yeah. Like we get all kinds.
No snow this year, so
no snow. But yeah, today, like Ted mentioned, we have what is it, 20 below wind chill?
20 to 30 below wind chill.
Yeah, 20 to 30 below wind.
No school.
It's freaking cold. It's hurt your face cold when you walk out. School's canceled today. My kids are ecstatic. Wife is ecstatic.
My son has had one day of school all week.
Carson just lounging.
He was up and screaming with excitement.
But I'm curious, hit us up on Twitter. Ted just mentioned he was going to start the account and
be posting. Starting the Twitter account. You're starting it.
No.
You are starting it. You do some
I feel like
social
Twitter
media.
would do a lot for us.
Okay.
Aiden, get on this. No, Aiden's out.
Okay.
All right.
You run the Twitter.
Okay, hang on.
You run it.
This is a plea to the listeners. God. Someone out there who is Twitter adept. Sorry, what is it called now? It's called X. Yeah. Somebody who can get us on Twitter and manage our account and do a really good job. We want to hear from you. Ted wants to hear from you.
Yeah, we don't have any budget for this, though.
I'm just saying, we can't pay you, but this is all goodwill coming your way.
We'll give you lots of name recognition.
Karma points incoming.
Yes.
All right. So, I'm going to do this, Ted, since I was kind of panicking about the golden nugget thing. I want to share something. All right.
Yeah.
So I mentioned this yesterday in our coffee meetup, but I want to give today's golden nugget. And here's the golden nugget. So I would say, correct me if I'm wrong here, Ted, would you agree that one of the most reoccurring questions that gets asked in real estate groups in general is who's got a good lender? What's the going rate right now? Right? Because it's one thing to search it, to Google it and see, okay, today the 30-year.
I don't know. It's been pretty much the same thing for the last year and a half, though.
Okay, so don't discount my golden nugget here, Ted. All right, so here's today's golden nugget. Snapshot in time today, January 23rd. Yes. Mm-hmm. I am refinancing a Fourplex, and the rate I am going into with this is 6.95%. This is a commercial loan.
It's pretty good.
25-year AM, 80% loan to value, and there's like minimal doc fee. Like it's a desk appraisal, but I'm still getting a fee for it. I'm mentioning this, guys, if you guys have a deal that you're looking at either refi or you have a purchase upcoming right now. This is what's possible out there. 6.95% interest, 25-year AM, 80% LTV. For those of you that live in markets that you're like, oh, no way, like it's 70 or 75% LTV, I will tell you there are lenders out there that can do these type of deals. So that's today's golden nugget.
Oh, and one thing that has been like kind of like all over the news lately is we don't talk politics in here, but there is some serious stuff happening in the market right now. And I want to spend at least 10 minutes of this 20-minute podcast talking about some things that are going to happen, because right now I have multiple listings that are pending to go up, and they're waiting literally for the Fed chair change, because Trump came out at one point and said, hey, I'm not going to put a Fed chair in. It isn't going to lower the mortgage rates back down to 3%. It isn't just his decision. There's multiple votes to make that happen. So it doesn't guarantee anything, first off. And then 10% credit card limit rates, which is really interesting. I think that's really going to affect liquid lending and other hard money lenders. if that does happen. And then the last thing is officially signed today. Wall Street backed investment companies buying single family homes cannot buy single family homes anymore. So all this stuff combined could be really good for the investors in general, but there's a lot of people that are dictating their whole entire business off of it. What's your thought on that?
Well, I guess first of all, the thing I asked you before we were on air was like, are people actually making their investment decisions on who the Fed chair is going to be?
Yes.
And you communicate with these people, right?
Yes.
So this isn't a made up deal.
I'm still an investment real estate agent as a big portion of my monthly income. So I have probably 5 listings that are waiting to go up. A lot of them think that by April that a lot of these rates are going to have a massive drop, making their properties more valuable.
So if I'm hearing you right, the prevailing belief is that a Fed chair is going to replace Jerome Powell. And as you mentioned, Trump has said multiple times that he is going to, basically he wants lower interest rates. He wants it for the national debt. He wants it for real estate investments and in general, the economy. He feels it's going to be a boon to the economy. And, to your point, the Fed chair represents one out of there's 12 Fed chairs, right?
I don't know how many.
There are 12, I believe. I was not planning on talking about this, so I'm a little unprepared, but there are 12 Fed heads, and they're in different cities around the U.S., Kansas City, Atlanta, D.C., I believe. There's several different ones. And the chair of the Fed does not a unilateral decision on what interest rates are going to be. They all vote on it. There's things that get voted down all the time. So I don't know, man. So I'm gonna pick apart a little bit of what you said. So we talked about the Fed chair change. You have people that are waiting in the wings to sell real estate because they feel like it's going to benefit them to wait and have a new Fed chair in place. Interest rates will go down. They probably feel like that's going to result in a higher purchase price or sale price.
Yep.
Is that right?
Yeah.
And that's the whole rationale.
Yeah, because some of these properties have been listed before, they didn't sell.
Yep.
Mainly the numbers didn't make sense because with the way current interest rates are, that it doesn't balance out. They hit the cap rate you want to achieve.
Yep. So I feel like you asked me what I thought about this. Here's what I think. So right now, there's a whole lot going on in the political landscape. So to kind of dovetail off of what Ted was mentioning about real estate related stuff, which I'm going to throw in 50-year mortgage that was introduced as a possible solution to the affordability, issues that we're having. And then, there's this talk about, or this executive order to outlaw institutional investors from buying single family homes.
Wall Street backed.
So what does that mean? And I'm asking you this because I don't have the information in front of me here.
They have to be listed on the stock exchange.
Okay, so publicly traded investment companies that buy single family real estate are no longer.
Is it BlackRock? Is the name of the big one?
It's Blackstone.
Blackstone, sorry.
Yeah, BlackRock. That's very common. People conflate the two, but that's my understanding of it. Is so you mentioned, all right, so institutional grade investors. So these are publicly traded companies that you see on the NYSE or the S&P, right?
And just so you know, on the Fed chair, there's 7 seats.
Oh, 7. Okay,
Yes.
I was way off.
Yep.
All right, it's not 12, it's 7, including the chair.
Including the chair. Yeah.
Okay, so 6 other Fed heads that could potentially oppose any interest rate changes. So that's something to keep in mind, guys. So this is the lifeblood of commercial real estate, especially is interest rates. And everybody is really hot and bothered about wanting to know what's going on with upcoming rate changes.
Yeah.
Right.
It's a huge deal right now. And it's constantly being brought up.
So, okay, I'm going to touch on one thing. I'm going to talk about the institutional investors no longer being able to buy single family homes. There's been a lot of stuff that's happened in the last few years where there's build to rent companies that will come in and they do new ground up construction, single family homes, and they keep them as rentals. So they'll build a subdivision, keep it in a portfolio, and then they sell that off or keep it on their, just to maintain their yield and so forth for Wall Street. If they're blocked, and my understanding is, and I don't have the numbers in front of me.
They got it. They have to be suing.
Or creating like a daisy chain of LLCs there's endless ways around this, guys. So this is a symbolic gesture, and I think it's trying to distract from what's really going on in the housing market, which is supply. And building costs and everything else that is the bane of the existence.
And just so you know, if you get rid of Airbnbs, it isn't going to solve it either.
Yeah. So there's a lot of red herrings in politics right now. which is a common tactic when they're trying to distract from other issues that are actually the underlying ones or the more important ones. And so I think that's what's happening right now.
Yeah.
I think this is all complete smoke and mirrors bullshit, and I don't think anything is going to systemically change. I think 1% of the entire single family population in the US is owned by institutional investors. Fact check me on that. 1% really of the inventory, and we're supposed to be excited about this like it's going to move the needle. Ted's fact checking me here, but it's less than 5 for sure. I say with confidence while Ted is waiting to
Keep going.
Okay. All right. So my whole thought on this whole rhetoric that we're hearing in politics right now is a big ass distraction for the issues that are really happening. There's several, which the Epstein files, let's just call out the elephant in the room here. Is that a thing that we should be worried about that's going to implode everything?
Why haven't they been released? And
don't know.
That's crazy.
So there's that, and there's, like we mentioned, I just feel like this is a huge distraction to other stuff that is more important and actually will move the needle. This is just rhetoric. So that's how I feel about it. I feel like it's just complete bullshit, and things are going to continue. People are going to keep getting their pockets lined, and it's going to be more of the same that we've been seeing for years and years and years.
Okay, let's back up. Like we've hit so many topics here. Like the Fed chair change first off. If they can influence the other 6 or 7 members, and a couple of them have been changed by the current administration, but if they can change the majority and get it to 3%, which is their goal, we know that.
Get what to 3%?
Yeah, mortgage rates. That's what they put out there. Trump's like, I want mortgage rates back down to 3%, and I'm gonna put a chair, and that's gonna get there.
Okay.
If that's true, that's catastrophic. That makes people move out of their homes. Anything below 5. Like I have a 2.9 rate on my current house, and I've been wanting to move for years.
Okay.
But I'm not moving because I have a 2.9 rate.
Right.
There's going to be people, housing market's just going to blow up, but also the housing values are going to go skyrocket also because there's going to be so many people on the market wanting to buy. So you're going to have your people moving out of the houses, looking for new houses. You're going to have investors that are coming back to the market that have been holding back forever. And on top of all that, tell me that's not going to be a boost for the economy, tax-wise, income finally changing up, but also investors buying houses, renovating houses, people buying new houses, doing construction projects. I mean, that would have to be a boost for the economy.
In this pretend world that you're creating, I would agree with you.
Yeah.
But the reality is, okay, the global economy here plays a major factor. This isn't just US centric. So the fact that we can, whether or not we want 3% interest rates, it doesn't matter, because what matters is, can we have any foreign or domestic investors that are going to buy the bonds? They're going to allow rates to be down at the level that you're talking about. And it just is not in the cards. It's not going to happen. I don't see it happening, maybe ever again. That's my hot take on this. Like, I think that them saying and wanting 3% is, I think it's noise for people to grab a hold of and say, hey, good news, we're going to get led into the promised land here. How do the fundamentals support any of this? They don't at all.
You mentioned bonds, and I just wanted to fact check this, but in 2025, Trump himself bought $51 million in bonds.
And where did he sell them?
I don't know if he sold them or not. Yeah.
That's the question. So that's why I'm so jaded on this, man. I just think, like, when you get into the top level of echelon of politics, your pockets are so lined with lobbyist money and different, like, it's so hard to know what. What I'm saying is, I'm watching a lot of Netflix shows right now about government, and what I've learned from watching those is follow the money.
Oh yeah, totally.
Follow the money.
Totally.
So whatever's happening in Greenland, 50-year mortgages, whatever, like, just pay attention, follow the money, and you're going to see what's really happening behind the scenes. Like, we're getting fleeced, guys.
Yeah, we don't know what's really going on. I would love to have know was in that meeting about Greenland that he had all of a sudden he changed his tactics on that too. We won't know for 20 years.
Well, it's classic posturing. So in a geopolitical event like that, you threaten first and allude to vague military action, and then it scares the shit out of people. They mobilize, they get there, and now you're like, hey, look, we just want to talk. And then you bring it down and you start having an actual conversation about what the real issues are. So I think he played a classic textbook on the art of war. Well, I say I mean, this is the whole administration and what their plan was. So threaten, come back, be conciliatory, act like you're giving them something, and then arrive at a resolution which is what you really wanted to begin with. That's what we're dealing with right now.
In the end point, it's just protection from Russia.
It's strategic assets and rare earth minerals, and you throw around all these buzzwords, but the real is we don't want to be in a cold war with Russia or a hot war with Russia and China
and controlling waterways too.
Yeah. So, and my amateurish take on this is all a red herring. There's a bigger political agenda. We as real estate investors can't pay attention to rhetoric. It has to be what's actually going on in the bond market and the interest rate market. And I just don't see it matching up to what the administration is telling us their goal is.
So I guess
that's my hot take, Ted.
We don't know what's going to happen, but all I got to say is to kind of sum this up on my opinion, if the Fed chair changes, they're able to get anything below 5%. If they're controlling credit card limits to 10% interest rates, and they're successful at preventing the big companies of buying all these single family homes, and all that's really true, and it does come to fruition, all that's really positive for us investors. Because it's going to change the market, it's going to put us back in the game, and it will bring more money in the community. But there's a lot of what ifs. And are you gonna keep on staying on the sidelines, not move forward with getting shit done? Because right now, to be honest with you, this is the opportunity to buy. And if you truly believe all that's going to happen, refinance later. Get the deal now.
I think that again, this is why we don't talk about politics, because there's layers to this. I agree. There's so many different opinions on it, but let's take labels off of people. So there's no longer Democrats, Republicans, or whatever. You have people that have an agenda and they want to accomplish that agenda by messing with certain things in our economy. And I think there's what we get fed as the general public, like what they're telling us they want to do and what the actual goal is, are way different. I'm jaded. I've just seen so many administrations go through, and there's all these promises and none of them ever come. So I'm skeptical.
My wife is a social studies teacher, which was Aiden's previous teacher here.
Oh, he talks about Jessica all the time.
Yeah, we heard. Stop it. And anyway, she talks about like George Washington, all the things he advised his future administrations to watch out for. He's like, don't create debt, don't get involved in other people's war, don't create separate parties. And she just goes through all this stuff. She teaches it all the time in her class. And I'm like, yeah, how the hell was that guy so smart? He knew it so early, and everything that he warned us against, not saying he's a perfect man, but everything he warned us against is like coming to fruition right now. And if we could have really listened to him and figured that out, man, we'd be in such a better spot.
Yeah. Ray Dalio wrote a book about and I'm going to butcher the quote of this, but it's, I think it's titled something about the changing world order or the new world order or something like that. He talks a lot about the mechanics of what fiat currency really dictates in a, society in general, and how long you can expect that to run, and what is the after effects.
Well, I mean, we could go down this topic for honestly probably an hour or two and have some really deep conversations, and maybe we will one day, and bring in a politician to talk to us about this. Maybe not. But hey, stay tuned for Wednesday. We have David Chan on the podcast. David's a local Omaha investor. He's doing things that are completely different. He's investing in like $700,000, $800,000, $900,000 homes in this small city, and he's killing it. And he's making the money. And we talk about how he does it, why he does it, and his aspect of why he looks at these properties as an opportunity. We met him at a Capping Cap Rates event, and we were blown away by what he was doing. And the stories he tells about working in the Communist Party in China and all this other wild stuff is going to blow your mind. So stay tuned until Wednesday. And with that, Owen Dashner, we see us out.
On behalf of Aiden Bear, Rhea Radio, and Ted Kosh, I'm Owen Dashner, and you've been listening to the
Real Estate Rundown. Sign out. This is the Real Estate Rundown with Aiden Bear
and Owen Dashner.
I'm not ready.
And me.
Yeah, Ted.
It's me.
It's me, Luigi.
It's me, Mario.
All right, are we ready?
Yeah,
we're live. Sorry.
You
Lock in.
want me to start that over again?
No, go ahead. Yes. Let's redo it.
Back on me.